maybe people thought nothing was going to happen. So if we go back, and this is obviously was in May, we saw this was the mining ban initially on May the 19th here, where in Mongolia was one of the areas that was taking down miners. Obviously that aligns with part of that correction that we had and timing. I have to say, I still think that this was almost like the thing that pushed the snowball off down the hill, and then the leverage caused us to go 56%. I don't think this in itself took the market down 56%. I think you would say it pushed us down the hill. All this news, because obviously it was a big thing, and there was a lot of investment in China around mining, and all the other things that go with it. I mean, it's obviously as a whole sort of sector of the economy. Whether everybody dumped all their crypto, who knows? I mean, obviously you can exchange it out overseas, etc., etc. So I haven't seen any evidence as to what happened with Chinese crypto assets, but obviously it makes a simple story that it lines up from a time perspective. And this on the same day, so May the 19th. And this was my point really about what was banned. Financial institutions and payment platforms in China banned from cryptocurrency business. You know, now if you can't transact with the banks in any way, you can't get your crypto in and out on exchanges, you can't take a loan to do anything, you just cannot do anything in the financial institutions in China. So this was a blanket ban in May. This sort of really told everybody what was coming, which is why I think we saw so many miners exit. There was a story today, which whether I have or haven't got it here, which suggested we were at 90% drop in hash rates in China, was I think the Chinese take from an analyst. So we can see that the ban was pretty severe, because you were not allowed to get on or off of exchange in RMB from this ban. Now, whether that was enforced in practice by everybody, I don't know. Got no way to go back and look. This was really my point, which wasn't that this is all FUD, because that's, you know, that makes a nice a nice tweet and everybody likes it. But actually, in practice, that, you know, there have been re-announcements and new announcements, etc., recently that will have made some difference. You know, in June, there was this is what happens in China. Quite often, you get the headline again in the state media. We've seen this private education. We've been getting them every few days. You know, just again, you need to crack down on this type of message. Let me just sorry, I just need to adjust this browser slightly because I can't click on the tabs. Chaotic computer problems. And then we had a renewed warning in July about cryptocurrency risks, and there's some more in August, which I haven't covered. And then, of course, we got this announcement September 24, which has picked up a lot of the Western media, that all cryptocurrency related businesses are illegal. Exit, get out of crypto. So you can almost say it's worded slightly differently, and it's caused some more people to exit. But clearly, back with the financial institutions and payment platform ban, it was very clear what the direction of travel was. We've also seen this announcement where we've got a phasing out of the exchanges that are serving Chinese customers. It does say that on the basis that users' capital security is guaranteed here. So it's obviously probably worth noting that. What they're looking to do, I guess, is make sure people can exit. They're not going to lose all their money, but you can't sign up from the mainland. Now, whether there's a black market, and there's black markets for things, of course, etc., but it's completely illegal in China. So, you know, if anybody's watching this in China, just keep away from crypto would be my advice. You know, I'm not tax resident in China. Anything I do is in the UK, but you know, it's very clear that all of this is now banned. So, you know, whether there'll be a weeding out, it all sounds like headlines, you know, we'll round people up and we'll this and we'll that. People write lots of things, but, you know, obviously it's not that easy to see a lot of things that go on in crypto. So we will see. Obviously, hiding a mine, you can't hide a big mine because of electricity, and we'll talk about that in a second because that's a story at the moment. But this is the timeline I see, and I see now it's almost like there's been confirmation after confirmation after confirmation, and now they've spelt it out extremely clearly that crypto is not a thing in China. So if you want to do crypto, that's fine, but go and do it somewhere else. Is the message. So we are seeing relocations. We've talked with Heath a little bit on Twitter about things like Qcoin and others that obviously were in China historically, but are now registered unsurprisingly in a tax haven, and then they've moved their people to other places like Singapore. So that was like part one. I didn't know if you wanted to add anything, Brandon, with regards to timeline one.
No, that's all that's super helpful, Alan, and interesting. And yeah, I mean, I was going to show some of the work that Michael did on the block-based, 4-year cycle theory. The one thing I do want to just kind of keep in mind for everybody is that models are great, but black swan events happen. And so we were on a meteoric rise, and then the leverage that was in the system got slammed when China kind of renewed. And China did do something new this year, right? They banned Bitcoin mining, which hadn't been done in the past. Like they had,
absolutely, yeah.
So that was a different thing. And so they kind of had cracked down on exchanges in the past, but they never banned mining. And now they're banning all crypto-related activity. So every time it is a further step. And like I don't know how much it was, but a significant percentage of all crypto, namely Bitcoin, but all crypto in general, it was held in China prior to these crackdowns. So I don't know if it was half, but it was close to half of all crypto. Did you cover that? Did I miss that?
Here's the statement from an analyst in China, but I don't know where they get this from. Chinese investors now account for roughly 10% of the world's Bitcoin buyers, according to insiders.
Yeah, they're still buying. Yeah, so that's a lot of buyers that are going to disappear. But yeah, at some point, the holdings in China were a huge amount. Anyway, so
absolutely. So there's a lot of miners. There was a lot of people speculating. But I think my point was, I think the crux of exiting would have been up here, because you can't get your money out of the system, financial institutions. And you've got to basically wash that round overseas and try and get it back into China or hold it offshore or something. So that's not really where you want to be. So I think we will see some more. Obviously, people are very clear now. I don't know if we see anything like we saw over here. That's all when we were in May, because that was felt to me like a much bigger announcement. This is just the same announcement again, just a little bit stricter, just to say, just to be clear, everybody, don't start doing anything with crypto. So it feels like the teachers kept on asking and the class has not behaved. So so now you're being told very clearly. So that was like sort of story one. There's another story which you may have picked up from, obviously there was a slightly sensational headline, I think, on Bloomberg again, but obviously this is very topical because we're in the north, we live here in the northeast of China. There's been some restrictions on electricity use in the news. So just perhaps to give a little bit of background on what that actually appears to be, reading through all the media here earlier today. I mean, it looks like we got a little bit of a perfect storm in that China's industrial sector has bounced massively from, firstly, obviously, the 3-month restrictions around COVID at the start of last year. And then because there were so many problems still with the pandemic around the world, orders have flooded in to industrial business. So China's been dealing with a very substantial increased demand for electricity from industry. So we're seeing down here, consumption for the first 7 minutes soared by 15.6% year on year. Now, obviously, many energy grids are going to, China's always adding capacity, But I think what this has done is this has caught out some of the planning around how much additional capacity required. And then there's been a sort of second part that China's been implementing some efficiency and green measures with sort of emissions caps. So because there's been an underestimation around this, it looks like some provinces have hit their emissions cap and are reluctant to go past it. And we've also seen demand sort of, I think, which is from outside China as well as inside China. And again, Dalian Commodities Exchange trades an awful lot of these commodities globally, just as a piece of trivia. We're seeing coal prices extremely high. I think someone said 300% up, which has obviously led to some of the companies that are producing electricity are not wanting to produce, losing money because of the price of coal. You've got a bit of a perfect storm. Now, there's no lack of coal in the north of China, enormous amounts. So what we're already seeing in this headline was that we're going to see some easing of restrictions. But what China's done, we've got a big holiday coming. You know, we've got a 7-day holiday at the start of October. What I've seen is there's some 1 week and 2 week restrictions been put on companies to use less energy to create a kind of period where they can sort everything out. And then we'll see what happens after that point. But what's expected is there's been some moves to increase supply into the market, so there'll be more coal available and to get the stocks back up. So I think, you know, perhaps related to Bitcoin as well, because it's another motivation. People say, why did China cut mining out? You know, they got lots of electricity. Well, actually, not necessarily. And there's been this huge economic, you know, the industrial area and others demand for energy. And, you know, the Chinese view was that, you know, Bitcoin was really non-productive. It was just a bunch of speculation. So, you know, we'll switch that off because we've got to divert our energy supply into the general economy and make sure, like, here the lights are on. I hope in true live stream style, the lights don't go off in a minute, which would be pretty hilarious. But so far, we're seeing very few restrictions on any residential areas. What the government's doing is making sure residential stays on and there's no overload of the grid. So that was like China story number 2 and a bit of context. The third one I don't have a graphic for, so we'll skip over it bar a couple of sentences really, which is the whole Evergrande story that obviously blew up and caused us, again, potentially a bit of a wobble in the market and everyone's in a panic. I posted a video on Twitter by Adam Koo, who's a Singaporean trader investor who invests a lot in China, that sort of went through the balance sheet and all the commitments of Evergrande. The one headline that jumped out for me, I'll just go and double check the number exactly, but the overseas bond commitment, which is the one, the default and all the noise was around, because we got this 300 billion headline, you know, 304 billion liabilities. It's a disaster. The offshore bondholder commitment's only 19 billion. They say only 19 billion, but 19 billion is not 304 billion. Most of the rest of their lending, which was another 61.3 billion, is to banks in China, and that's secured with a whole massive land bank assets, which have value to the banks in China. They're still going to build. You know, China's developing. There's still huge demand to build more property, build more shopping centers, build more business parks. You know, so this is not anything like subprime. And, you know, for those, I mean, I did a bit of work writing some things about subprime 2009. And in subprime, as I think probably most of our informed people in CTM will know, you know, the value of those sort of slice and diced baskets of mortgages was zero because nobody was paying them. And obviously it all goes to zero, and then hence you get a giant capitulation. You know, this is very different with the Evergrande situation. So, so could they default? Absolutely, they could. if they have too much cash flow trouble. Is it going to cause a massive problem in China? No, because the value of those assets, if they were sold off, is strong, and I don't see the government here wanting any more kerfuffle around that either. So that's my take on the China stories.
Finally found it. While you were talking, Michael asked about a link to Alan Koo, and I finally found Adam Koo, not Alan Koo. Adam Koo. I found a link to a tweet, Michael, that Alan P had posted. So I'm going to put that in the chat right now for you guys. Here's the tweet.
About 10 minutes in, there's a balance sheet, dismantles the balance sheet and looks at all the liabilities. He also shows I think one of the things people haven't understood is China's been putting in restrictions on lending for property in its banking system in order to cool the market down and take risk out of the market. And that was being done before this Evergrande thing has blown up. It's actually put some pressure on them because they've fallen foul of they've got too much leverage, and so they can't borrow the way they were. So that's one of the reasons they've been having trouble. But again, that doesn't look to me like anything that says we're going to have a sort of contagion across. In fact, China's ahead of that and has been changing the lending mix within the banks. So, I mean, I think sometimes there's an assumption that everything in China must be the same as everything in Europe or America, whatever, and it just isn't. And I think it was always tread with a bit of caution when Western media starts pumping out these headlines. You know, they get paid on clicks. They don't care whether what's in there is right or wrong. We saw that with Litecoin the other day. They didn't do any research at all. They just cut and paste it everywhere. Didn't even look on the Walmart PR to check it was a genuine announcement, which just goes to show.